Hi dear traders, last trading week closed with yet another round of speculation regarding the likelihood of the US Federal Reserve continuing its hawkish rhetoric. The regulator is very likely to increase the rate again. The potential further monetary tightening traditionally strengthens the local currency. Thus, the US dollar index, which shows the position of the greenback against the basket of 6 major currencies, closed the week at its October high of 106.50. The personal consumption expenditures index still shows elevated inflation rates, suggesting that the Fed could proceed with its plans and raise rates once more by year-end. However, market expectations suggest that this is unlikely to occur before December, with 99% of traders confident that the interest rate will remain unchanged during this week's meeting. The dollar index gained approximately 0.5% by the end of last week, primarily due to the sell-off in the European currency. Investor confidence in the euro waned amid beliefs that the European Central Bank won't be hiking rates further. At a recent meeting that took place on Thursday, the ECB chose to maintain its current rates, emphasizing its capability to curb inflation. Consequently, the euro slumped against the dollar, reaching 1.0525. Additionally, investors are factoring in macroeconomic data. The downbeat business activity indices, hinting at potential economic downturns, are also influencing trading decisions. All eyes are now set on the upcoming release of the Eurozone's third quarter preliminary GDP data. The economic outlook for the United Kingdom is not rosy either. The British economy also shows signs of a recession, making it unlikely for the Bank of England to increase its rates any further. Moreover, Bank of England Governor Andrew Bailey noted that September's inflation readings were in line with the central bank's projections. The pound sterling thus continues to lose ground against the US dollar. Meanwhile, for traders focusing on the Japanese yen, a rate hike from the Bank of Japan seems a distant possibility. Previously, there were speculations that an exchange rate of 150 yen per dollar might lead to currency interventions. However, such expectations were dispelled, especially after Finance Minister Shinichi Suzuki's recent statement. While he acknowledged monitoring the yen's valuation, there was no hint of any imminent interventions. As a result, speculators have shifted their focus to other, more profitable assets. Gold, often seen as a safe haven asset, is experiencing extreme volatility due to escalating geopolitical tensions worldwide. Not a day goes without financial news addressing the situation in the Middle East. Today is no exception. As the trading week were concluded, news emerged of Israel commencing a ground operation in the Gaza Strip. This news sent shock waves across the globe, propelling gold prices above $2,000 per troy ounce. Consequently, the precious metal has been rising for the third consecutive week. In light of these geopolitical tensions, Brent crude oil managed to stay firm around $90 per barrel. Although oil bears had an opportunity to profit from selling the assets, the potential cooling of energy demand in the US put downward pressure on oil prices. At the same time, there is a silver lining for optimists. Business activity indices surpassed the expected values. With the US experiencing declining oil reserves, it's likely that the American economy may soon face an energy resource deficit. This naturally sets the stage for potential hikes in crude oil prices. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!